Well, good morning, everyone. Welcome to the Portugal Fintech Report 2002 launch event. We are very excited to be here. We would like to give a special thank you to Moderator for providing us this great space to launch such an important report for the fintech ecosystem. Today we will start with the main insights from the Portugal Fintech Report 2022, and then we will have 3 panels and 2 keynote speakers. We will start with João Patrone from KPMG, who will moderate a panel on investment. Then we will go on with Gonçalo Santos from Visa, country manager of Portugal, and he will give some insights on recent payment trends. Then António Ferrão, director of Fintech Solutions, will moderate a panel on fintech trends. Then we will have the first Portuguese crypto unicorn case study by José Pedro Silva from Anchorage. And then we will have the last panel moderated by Mariana Albuquerque from Moderator, where crypto will be discussed. At the end, Marta Palmeiro, Portugal Fintech board member, will launch the Fintech House Scholarship 2023. So today we are launching the 6th edition of the Portugal Fintech Report, which means that every year there's a lot to say about the Portuguese fintech ecosystem. And this is great news for us, Portugal Fintech, because we are a non-profit and non-governmental association with the main goal to make the fintech ecosystem in Portugal grow. And this by supporting the startups in 4 main pillars, so connecting them to regulation, mature players, talent, and capital. And how do we do this? Through the research, through the Portugal Fintech Report, so an overview of the fintech ecosystem in Portugal, the advisory arm of Portugal Fintech, Fintech Solutions, and then the hub, the Fintech House, that actually recently just moved to a new building, triplicating the area to help even more startups. So it's a great year for the association, and I would say that this means a great year for fintech in Portugal. So I would like to welcome you, Raquel Silva from Portugal Fintech, who will give us the main insights on the Portugal Fintech Report 2022. The stage is yours, Raquel.
Thank you.
Thank you.
Thank you, everyone. I'm giving you a brief overview of the Portugal Fintech Report 2022. As Cristina mentioned, this year is our 6th edition, and the purpose is still the same, to provide an overview of the state of the Portuguese fintech ecosystem. And to do that, we go directly to the direct source of information, the startup ecosystem itself. The report is based in 4 chapters. The first one is about the Portugal Fintech Association and its initiatives, the Fintech House and Fintech Solutions. And then we have the industry overview, in which we then subdivide between the 4 pillars of action of the association. So mature players, regulation, capital, and talent. And then we finish with the trends of 2022 and 2023, with the insights from key stakeholders of the industry, such as Eva Ruiz, head of fintech at Visa, and João Menano, product leader at Google. What I think is really different from last year is that we really tried to provide a lot of insights and testimonies from startups and investors and corporates and do's and don'ts from their experience. So, for example, we have testimonies from investors and VCs about raising investment. We have Moderator providing an article about giving some clarification on the fintech licensing in general, like how to give some clarity on this. And as usual, we have the chapter about mature player collaboration. So what has been done? What are some success cases? For example, we have a case study of Coffee Dish and Tink. And we have Novo Banco's internal innovation program. So what went well and why is this important for mature players to tackle? And the 3rd chapter is the reason why the whole Portugal Fintech Association exists, so the fintech ecosystem itself. So we have, as usual, the emerging fintechs, the fintechs that were created in 2022. And we have also international startups operating in Portugal. And we have key differentiators, use cases, the team information. So I'd really like to invite you to then explore these startups. And then a new chapter that we have this year is about decentralized finance due to its increasing relevance in the financial service industry. And we do that with articles from different perspectives. So the one about micro-regulation and what can we expect. Another from Sanjay Khan, CEO of Utrust, about financial literacy in the crypto world. And we also have the perspective of the mature players. So what has corporates been exploring and how can we learn from them? And that's basically it. So moving on a bit on the insights from the report, what a 2022 Portuguese fintech looks like. It's really interesting to see how diverse the ecosystem is. And this year's the verticals with more relevance are payments and money transfers, lending and credit, and blockchain and crypto. And the most popular year of foundation is 2021 and 2020, and approximately 75% of the business model of the startups are B2B. In terms of geographic distribution, most of the startups are still founded in Portugal, even though we have some headquartered in the European Union and the US. In terms of Portugal itself, we have the cities with more startups headquartered are Porto and Lisbon. Then moving on a bit on the insights on investment, this year we reached a very interesting milestone, which is the total funding from the fintech ecosystem in the report has surpassed 1 billion euros. So I think it's also interesting to see how in 2022 the fundraising is still increasing. And on average, 38% of companies have funding from international investors. Just another note, the top 3 verticals with regards to funding in percentage of amount raised, the first one is blockchain and crypto by a large amount, almost 80%. And then the other verticals are lending and credit, and RegTech and cybersecurity. On talent, the most difficult role and position to find or hire in the job market is still engineers, by a big amount. And the seniority that is more search are approximately 5 years of experience and very senior positions. And the supply of developers in Portugal is still not considered enough by founders of the fintech ecosystem. In terms of collaboration and regulatory insights, I think the most interesting statistics that I wanted to share with you is the fact that the greatest hardships when working with incumbents is, according to startup founders, cybersecurity and data issues, and also insufficient resources from the corporate side. And on average, 30% of startup founders think that a faster decision-making process should be the development area for incumbents to work with fintech innovation. In terms of regulation, I would just like to state that in terms of micro-regulation affecting startups' business, it's still very unclear, so the responses are quite similar. So there's really a lot of unclarity on what is to come. Finally, without taking any longer, I'm very proud to share with you the Portuguese fintech ecosystem map with the startups that are part of this ecosystem. And I would really like to invite you to explore them in the report, get to know what is their business case, what are their teams, their key differentiators, and really get in touch with them because there's a lot to be done and great collaborations to accelerate the future of financial services. Thank you.
Okay, thank you so much, Raquel. I hope this made you curious about reading even more the report. So now moving on to the first panel. The first panel will be about investment and a new VC, a new chapter in VC funding. And I would like to call João Patrone from KPMG, who will moderate the panel. João Freire de Andrade from Big Start Ventures. John Fath from Rauva, and Rodrigo Russel from Utrust.
Good morning, everyone. On behalf of KPMG, let me start by thanking Fintech House, Fintech Portugal, and Fintech Solutions for having us as partners, and Moderator for hosting us this morning. So at KPMG, our international network also has its own report, the FinTech Pulse, which I would invite everyone to check out, and which provides some of the backdrop for today's discussion. So we track investment trends and investment flows across the globe on a more global scale. And so risking stating the obvious, as we consultants are known to do, what we're seeing is that the fintech space is being affected by the macro backdrop, and in particular, dramatic changes in the interest rate environment across the globe. That, of course, puts pressure on cost of capital to all companies, and for startups in particular. That puts also additional pressure on, well, providing a track to break even and to positive cash flows. So in a nutshell, I could probably say that the cash burn era may be past us, but still we do have a lot of dry powder to be deployed. So, having said that, my first question would be for João Freire Andrade. João, as a venture capitalist, how do you see these changes affecting your business, both on the capital raising front and the capital deployment front?
No, yeah, that's so great question. First of all, thanks a lot for inviting me to speak, and it's a great pleasure to be with all of you. With the question, yeah, no, I think that's very important for the startups to think that the capital environment changed a lot. Like, I think the fact that we have to look, it's the uncertainty on markets, the cost of capital increased a lot due to the interest rates, so alternative asset classes typically are less picked once we are in this type of environments. This means that the money that VCs are able to fundraise, it's harder and harder. So slowly, and you mentioned that there's lots of dry powder, but the truth is slowly the money will be more difficult to raise. So that's one key message that I get to the startups that that will going to be important. One second thing, it's regarding like what how VCs are looking to the market, and I think valuations. To the we got 1.6 trillion in value of public listed companies that disappeared, like the multiple, the forward revenue multiple decreased from 17 to 6. This is a huge drop. Even today, I was speaking with Nasser about companies, Portuguese companies, or let's say with Portuguese DNA, like Fath, and like the price went from 60 to 8. So we are observing huge depreciation in the public market where the money adjusts. Of course, in the crypto space, if you got a token, this type of proxies could happen as well. But in typical, let's say, private fintech companies, the adjustment doesn't happen like that. So what we have been observing, it's a little bit more, the rounds take more time to be raised. And they are really, so VCs are, I was expecting that VCs would always do this, but they are even being more picky with the most important factors like team, revenue, traction, etc. So the most important things. So a key message here, it's valuations are decreasing, and this makes companies or taking more time or doing down rounds, as what we observed with Klarna, or simply not being able to fundraise. So that's what I observe now in the market. But again, a key message, it's also in the positive side of things that there's very resilient companies, and we're going to observe very interesting rounds also, not just in fintech, but also in the Portuguese fintech scene.
Okay, so speaking about new companies, I would probably go to John. So John, co-founder of Rauva, an early stage venture. And to you, John, I would ask, how have the changes in the investment environment affected, on one hand, again, your prospects in terms of fundraising, but also I would say your plans towards product deployment, product development, and your business plan going forward.
Yeah, thank you. Sorry, thank you everyone. So so that's a good question. We put an extra effort on users, right? You really, more than ever, need to understand your user, right? So everything is more and more customer-centric, because that helps to build also a very lean organization, right? When you look at your unit economic, if you really know your client, if you really know your user, you don't ship and build anything which is useless, right? It's laser focused towards the audience, trying to understand who they are, how old they are, where they live, what do they watch when they go back to home the night, right? So we really pay extra effort to understand that. When you build with that in mind, you build what the user is asking for, right? So you create value towards your product. And I've seen so much project and feature which have been built in the past and are generally useless, right? In the former company I was running into another digital bank, we were looking and mapping all the features, and at the end of the year, looking at really what was used and not used. So a couple of features used once or twice, and generally this is used by the QA team to test if it still works. You know, this comes with a cost to maintain, on top of the cost to ship in, right? So if you really understand your client, you're not going to do that, right? And also, you know, I was just listening to the VC here, and I think that's right. The valuation that you have seen in the past are going to change. The marketing activities, which was promoting a culture of hyper growth, is also going to change, right? So what we are doing, for instance, right now, in order to accelerate the path to profitability, is looking at niche, right? You look at your product, you look at your niche, you understand perfectly who is in this niche and what the niche is in the needs, right? What are the needs for the niche, and you pierce and build a product to get 15-20% niche. When you get that, you go to another niche and you look at the feature that this specific niche needs, right? So bottom line, yes, so customer centricity, there is no one thing, for instance, at Rauva that we do without asking 50 users, right? There is no one button, one color, one feature which is done. That allows the team to understand the audience, and also in terms of marketing, that allows us to really be laser focused on the audience, right? And you have all tools today to really understand this customer base.
So focus on specific products and knowing your clients as well as you can. Going to Rodrigo from Utrust. So Rodrigo has a very, I would say, uncommon experience in terms of capital raising, particularly compared to the Portuguese landscape. So I would put a more open-ended question. What was the rationale for Utrust going with equity tokens instead of more, I would say, traditional forms of capital raising, be it VC or M&A or whatever?
First and foremost, good morning. Thanks for the invitation. I think it was a trifecta. Number one, we are a crypto native project, so a cryptocurrency payment platform. So raising tokens makes sense. Number two, the token itself can have multiple applications within the ecosystem, loyalty, cashbacks, even more related with inner workings of the platform, can be used for dispute systems between buyers and merchants. And it makes sense at the time. Also, the timing was right. So I think, long story short, but one of our co-founders, they used the competitor, the experience was awful, he got scammed. So it's this is a pain, I need to solve something. And that episode happened close early 2016, so ICO Mania started in 2017. So the timing was totally right, made sense. The utilities of the token made sense to create an utility token, and well, the ecosystem was flourishing. Today, I think, at the time, I think 80% of the projects wouldn't need a token, but I think in our case, it was something that makes sense. Today, more and more, I think, equity versus token, we talk about hybrid solutions, hybrid frameworks, but like you're saying, VCs are being more picky, the tokens, the economics of the tokens need to work, needs to be some kind of a proxy to revenue or the fundamentals of the company. and it needs to complement for the network effect. But in the Utrust case, it was, I think, I would call it luck, but it was a nice wrap up in terms of all of these things that allow us to do tokens. And if it was today, we would do it the same, probably with some sprinkles on equity.
So, moving on to our first keynote speaker. I would like to welcome you, Gonçalo Santos Lopes from Visa. He's a country manager of Portugal, and he will give us his insights on recent payment trends. Gonçalo Santos, yeah, is there.
So, good morning, everyone. Thanks for having me again this year. Very happy to return to Portugal Fintech Report launch event. I was here, I think, 12 months ago. And at the time, I really talked about payment trends after COVID. Well, it was not after because we were still during the pandemic situation, and we are, but now much better situation. And at the time, we talked about payment trends that were happening. Now, today, I'm going to talk about more fintech trends that are really shaping the future of payments and money movement. So if you're not into payments, which is probably 50% of this room, I hope you enjoy. If you are into payments, probably you're going to get bored because I'm going to say things that you have already listened many times. But again, so last year we talked about, the 5 trends, which were e-commerce and mobile commerce growing exponentially, about the rise and growth of digital wallets, about new ways to pay, including, account to account and some features or functionalities of open banking. And, there were also, of course, new ways to make money move, which were crypto. And finally, buy now, pay later, which we're going to talk again today. So actually, what we have seen over the last few months is that there's been a transformation of the sector. And now if we can have the slide. Now we are seeing that these 5 trends that we talked 1 year ago are still there, but in a, let's say, in a different stage of maturity. So, okay, it's working now, good. So the macro fintech trends that are shaping the future of payments and money movement, basically, let's start with the first one. We will go one by one. I would need half an hour to talk in depth about all of them, but let's go quickly. I have 10 minutes. So big tech, I think big tech expanding, vertically and horizontally. It means that now we're seeing big companies like, PayPal, Apple, Google, Square, expanding not only the size of their businesses in financial services, but also entering new areas. And for instance, let's talk about PayPal, which is probably the one that is more advanced in terms of covering the different, let's say, products or business lines. They have started by enabling payments in e-commerce. Then they moved into POS. Also, we're seeing that they are enabling money movement as one of their key trends. But they are already opening accounts, giving debit cards, extending loans, and buy now, pay later. The same is happening with Apple. They have announced buy now, pay later feature. I would say in the US, in Europe, it's still not known what they're going to do. But all of these players definitely are growing, and I think financial services are being transformed as we know them. Because until now, and for those that are probably from my generation, we see financial services linked into a bank, not into tech companies. And this is definitely changing, and it's going to change. You might say that this is going to be a big risk for fintechs and startups, right? I think somehow it is, but also brings an opportunity because consumers, and not us, but I would say the majority of consumers will start seeing financial services with some new eyes, some fresh eyes. They will actually, the fact that these big players are growing will allow consumers to see smaller fintechs, and for sure the competition in the market will increase substantially for the banks and for the financial services companies that exist today. So I would say good news for consumers, not so good news for established players. I would say definitely we will see a growth of big techs, but also I think the fintechs will have its chance to compete in the market. And then, open banking. I think open banking is clearly moving into a new stage. I would say that initially we had mostly compliance requirements by the players. Then we started to see some propositions being live in the market with some features, but not really at the level that we are today. Where, for instance, it's possible for a consumer to get a personal loan online in Portugal by just providing its bank account data to the company, which in this case, it's present on the report, so it's public, you can read it. It's been a partnership between Coffee Dish and Tink, which Ricardo is here in the first row. And for sure, it's a good example on how, open banking, that is something that is still a bit far away for us here in Portugal, is changing. And we are starting to see that more and more we will be able to do new things like getting a loan online just by providing the data from my bank account. Then I would say one that is really transformational is the banking as a service being made available to offer financial services for non-financial institutions. This is a bit like for those that know how cards work. So basically now what fintechs were doing were when they could not get a license, they were getting a BIN sponsor, so someone that issues the cards on their behalf. So this is the equivalent, but not for cards, for the entire banking services. So this is very, very, I think it's going to completely change the speed to market. It's going to change the features that will be offered. Also because these companies that offer banking as a service will benefit from the partnership with the fintechs that will allow them to grow and develop new functionalities. So I think it's good for both parties and definitely, again, more competition to the market. Then let's talk about crypto a bit. I think, clearly crypto has gone mainstream. And, I think we are going through a winter in crypto at the moment. And it's part of the cycle, of the maturity cycle of crypto. For sure, we're going to see new things happening. We're going to see a continuation of, the currencies to expand. A lot of talks about CDBC, so central bank digital currencies. And for sure, and we will have a final slide, which is probably the best piece of this presentation, which is the next slide. We're going to talk about where do we see crypto in 2027. I'm not going to say now, I'm going to keep it for last. What I would like to say is that Visa has been very active on crypto. So if you look at the majority of the value propositions that have been launched, card value propositions that have been launched, linked to crypto, either to spend in fiat or in crypto, you will get cashback in both also, but it's linked to Visa brand. So Visa has invested heavily on this sector and is clearly continuing the path of innovation. I think one sentence there, it's good. I see it happening, which is the crypto exchange becoming the next generation of neobanks. So if you think about these companies that are now crypto exchanges at the moment, they are targeting exactly the type of clients that the neobanks want, which are the ones more digital, that invest, that pay a lot, that need to make international transfers. So there is, I think, a possible move from these crypto exchanges into becoming neobanks. And finally, buy now, pay later. I think we have seen a lot of talks about buy now, pay later over the last 12 months. I remember what I said 12 months ago. I said, buy now, pay later is not a new thing. It already exists. It's just a new way of doing it. I think a better way of doing it. And I think what we have seen is some transformation in the business model and some consolidation. And for sure, this will continue to happen. I think the transformation of the business model was you have a buy now, pay later solution that partners with a merchant, a single site, website. Now, what has been happening is that these companies that offer buy now, pay later have partnered with multiple websites using virtual cards. So I can buy everywhere I want with a virtual card. I think the next stage is for these companies, and like Klarna, for instance, to become marketplaces. And finally, they can even become financial services providers and compete again with the big for this market. But definitely very interesting market. I think the number of users and the number of merchants has grown by 100% in 12 months, which is very substantial. Even if the hype of buy now, pay later has passed a bit, I can easily say that in 3 years we're going to see the market size being tripled easily, from 200 billion to 600 billion worldwide. I think also a lot of consolidation and partnerships, but also important to say a lot of regulatory pressure, especially in Europe. A lot of question marks about how this is going to evolve. I would say also some questions about how a consumer can control multiple buy now, pay later loans. And finally, some question marks around how the buy now, pay later players will be able to manage credit risk in a more, difficult environment in terms of macroeconomics. I think these are the main challenges. Again, a lot of innovation, a lot of good things coming up of buy now, pay later. So now this is the most difficult exercise, okay, which is to say, what are we expecting to see in 5 years? And I'm going to make a joke. I always make this joke. I'm sorry if some of you have heard it before, but I remember when I started working in innovation in payments, which was in 2010, and I said to my colleagues in the bank which used to work, that contactless payments are going to become the future, and e-commerce payments are going to be the majority of payments. And people used to laugh at me, saying, Gonçalo, come on, this is not true. And it took a while, actually, in Portugal. And I remember doing something like this, saying, in 2016, we're going to have contactless payments being mostly used in the market. And I missed it completely, okay, by 3 years. Well, 4, actually. It was a pandemic situation that completely changed and made consumers perceive that it was much easier to pay with contactless than to pay with other forms of payment like chip and PIN. But again, let's move on and let's see what we expect, or what are the, let's say today, not in 12 months, not in 36 months, but today, what is the vision of the future? So clearly we see big techs, changing financial services, and we see a lot of players that will become the super apps. The super apps that we know from China and from other markets, they're going to be in Europe, and we're going to see this integration more and more happening. Also, open banking, I think we're going to see a continuous growth of the pressure in terms of margin and a fall in the number of players that are part of the ecosystem. So a lot of consolidation. And I have to say, and Visa has already made its investment on this market by acquiring Tink, which was, I think, a clear sign that the future will be very different in the open banking sector. Finally, and this is probably the most exciting thing, we see crypto running on payment rails. Of course, if crypto can be regulated, I think that's the most relevant part. If central bank digital currencies, they will probably exist in 2027. So it's just a question of, I want to pay in this currency, I want to receive in that currency. And there will be someone in the middle acting as the company that can manage that. By the way, today it's possible to be done. I can buy in dollars with my euros card, or the other way around, or any of the currencies that already exist. So this is nothing really new. Finally, buy now, pay later will continue to grow. We'll see more consolidation, a lot of regulation pressure. So I think this is more or less what we expect for the future. Not very different from the first slide, but it's just, I think it's going to be a bit exacerbated versus today. Finally, and because I'm already ahead of my time, just the go-to-market approach will not change. So we need to continue to be customer-centric. We need to have the best experience, and basically, I think this is the most relevant part, is all the fintechs will need to achieve scale to succeed. I think this is one relevant because of the other two. Thank you very much.
Thank you so much, Gonçalo. Okay, so I would just like to change the slides. Okay, so moving on to the next panel on fintech trends, I would like to welcome you, António Ferrão, Director of Fintech Solutions, who will moderate this panel. Also, Ana Teixeira from Mudey. Also, Dyma Budorin from Hacken. And I'm trying to see the other speaker, Carlos. Carlos, Sustainable Finance Expert. The stage is yours.
Thank you. Please. Good morning, everyone. Thank you very much. And thank you, first of all, for you three, especially because the three of them contributed to the report, either through a startup or through the article. And it's always a challenge to run a panel on trends, especially because we are talking about really different businesses. And let me just check my notes. Yeah, so the challenge here is that the Portugal Fintech Report always presents 5 main trends. Cybersecurity is one of them, embedded insurance, embedded finance, including embedded insurance, and also ESG as almost a fourth trend, or like a trend that's becoming stronger every year. But trying to make a conversation out of this is quite a challenge, how to connect 3 different businesses. So let's try to make it from the perspective of the user. This was my idea, like how the final user or how everyone or the society kind of will see this impact in their lives. And that's how we also show that the fintech ecosystem is a real thing and it really impacts people. So, and starting by you, Dmitry, I like cybersecurity is always a topic that everyone wants to talk about, but no one really wants to invest until they see something scary happening somewhere. And you are talking about cybersecurity on Web3 protocols. And how do you see this change? So do you see this pressure being forced by crypto holders that are afraid of what can happen and they are really sensible to trusts? Or is it like the exchange and other protocols that also want to be proactive on that?
Thank you. Bom dia. First of all, I want to introduce myself and say big thank you to Portugal. My name is Dyma. I'm from Ukraine. Hacken is 6 years at the market. We focus on Web3 cybersecurity. We went to Portugal last November for the series of conferences, crypto conferences. We loved Portugal. And 10 days before the war, we decided to, for safety reasons, to move away from Ukraine. And so then we made a decision where to make a headquarter. And now we are in Portugal. Thank you so much for inviting, for amazing fintech house. We feel like home here. Answering the question, cybersecurity is people are thinking about cybersecurity to start working on it in 3 cases. Yes, you're right. When they lose something, when they have pressure from the law, or when they feel that they are losing revenue in terms of losing competitive advantage, or losing to competitors. So if we speak about the first thing, people will lose money. People will be they can be tired and pressing the email links. It's okay. Like fish usually catches the hook when it's tired and sleepy, so it's normal. But people get educated. When we are born, we are not used to carry our wallets and phones all the time with us, so it's normal. People will learn how to do these things. But of course, we will see more and more hacks. If we talk about the pressure from the law, so this is how the traditional Web2 cybersecurity market was born. Right now, Web3 security market is not even close. Maybe the annual turnover of Web3 cybersec is around 500 million global, which is peanuts comparing to the big Web2 cybersec market. But we see more and more pressure, not from regulator standpoint, but from the industry, kind of internal regulators like CoinMarketCap or CoinGecko, who are starting to highlight who is paying attention to cybersecurity and who is not. And this directly is connected to the third thing, losing competitive advantage. So, for example, we are the biggest, by far, cybersecurity auditor of cryptocurrency exchanges, Hacken. We work with out of 50 companies with 30 of them, and we see that once the CoinGecko have implemented the cybersec element in the trust score, CoinGecko. Then all these companies started like to ask for the pen test, ask for the where we can host the bug bounty. So it's developing, yeah. But yeah, thank you.
Yeah, that's an interesting perspective. I'll see how you also go after. There's like a FOMO on cybersecurity, and you also want to follow what the best practices there. But passing you to, and we are talking on embedded finance is always a huge topic, and everyone is always saying it's the biggest trend, and everyone's the financial players want to pass to non-financial services, non-financial players want to provide financial services through their channels. But how do you see the struggle in terms of finding the practical use cases and getting closer to the journey of the final user? And how do you partner with third parties to embed this insurance and embed this experience?
First of all, thank you for the invite. It's good to be here. I think it's probably the first time that I'm in the fintech. I think embedded finance, I think Gonçalo from Visa has already provided a few good examples of what embedded finance is and will become more and more. If we want to, in simple terms, embedded finance is financial services or tools provided by non-financial providers. And he gave us a few examples of how that's happening. Traditionally, when we think about a loan, we used to think about going to a bank and negotiate the best terms. If we think about paying someone, we would go to our bank portal and we would make a bank transfer. But they are always separate experiences. Embedded finance allows to bring all that together in a single interface with a single user experience. And that means from everywhere, everybody wins in that situation. The consumer, it's obvious, it's convenience, right? If I'm trying to buy an iPad, I go to a merchant online, I choose my option, and on the checkout, I can pay using a one-click option using my credit card, or I can select paying by installments with the buy now, pay later option, right? And so from the consumer point of view, it's obvious that it makes sense, it's convenient. It also allows consumers to access financial services that otherwise they probably wouldn't. If I couldn't pay my iPad up front, I wouldn't think about going to a bank to ask for a loan. But if I'm offered that option, I probably will buy the iPad. So, and the merchant itself also wins, right? Because it offers additional services to the customer. It gets probably a new revenue stream because there's probably a transaction fee for the credit that is provided through their page. But also allows the merchant to probably convert more, right? Because if the customer is given the option to select how they want to pay and to add for other services, they're more likely to buy. And also, importantly, and probably becoming more relevant in the future, is the access of behavioral data from the consumer. It allows the merchants to better understand that customer and probably think about future development things, businesses, right? From companies like Mudey, so Mudey is an insurtech company. We have an intelligent platform to buy and manage insurance, and is a platform that is API driven, right? Having the ability to partner with those companies basically untaps a distribution channel that we wouldn't have access to. It allows us to get what Gonçalo was saying, to scale, right? Which is important in the fintech company and in insurtech in particular, because it's low volume, low margin, high volume business. So how are we, how is Mudey or companies like Mudey? I think that we are very well placed to take advantage of this opportunity. First of all, because our platform is API driven, so we easily integrate with third-party providers. So we currently have 15 insurance companies we work with. So in embedded insurance in particular, I think it's important to be at the right time at point of sale, but we need to be with the right product, not a shell product. We need to customize something for the insurance product to fit into that experience, but also to fit with the product and service that our partner is offering. So by having an extended network and partners we work with, we're all able to find and customize the insurance product. And also related to the data point, which I think is really relevant, is the data skill set that we do have, to be able to help our partner to optimize that experience and find future opportunities as well. So I think embedded insurance in particular is definitely a big trend now. And companies like us definitely are well placed to grasp that opportunity.
Can I just make a follow-up question on that? Is that I know from the fintech perspective and the fintech ecosystem perspective, we are aware of these opportunities. But do you think from the merchant side and from the ones selling products and that can potentially embed these experiences, do you think they are aware of these opportunities, or do you think there's like a lot of education still to be done?
I do feel that they're becoming more and more aware. I think digital and online companies do understand the concept. I think there are barriers, like technology barriers, because it does require development, and as we all know, at the moment is very expensive. But I think the way, at least that we try to sell embedded insurance, it's definitely a new revenue stream, but it's higher conversion rates, and I think there are already use cases that we can show that's real. And also, it's a way of loyalty, keeping your customer within your ecosystem. So you're not redirecting that customer somewhere else, you're keeping him within your control and being able to shape that experience as you think it's right. And I think that's a huge selling point.
Yeah, thank you. Yeah, and just to keep on time, and passing to you, Carlos, you wrote a really practical approach on what is happening with ESG, next steps, how taxonomy will impact. Can you share, what's your perspective on how long will it take for us, retail bankers and retail users, to see not name tags, but category tags on investment products, on sustainability based on taxonomy?
Thank you so much. Good morning. First of all, I would like to say that there's a wave of legislation and regulation coming our way pretty fast. So the ones that are most ready to adjust and adapt will be the front runners of this business of sustainability, which, by the way, is a huge opportunity out there. So answering your question, and let me just say that my background as a portfolio manager, I have the sense of the need to have that kind of score in front of me, but also because I was part of the platform for sustainable finance, providing recommendations for the Commission on the context of the taxonomy, I also know what actually the regulator intends to do. And what they intend to do is to channel funds towards sustainable finance. Now, to your question, I have a quick answer and a long one. The quick answer is next year. So by next year, we would have financial products with a taxonomy alignment embedded. Now, this has been delayed. It was supposed to be mid this year already. The problem around this is the whole ecosystem of regulation that exists. We have the SFDR, which goes precisely on the market instruments. We have the CSRD that will substitute the current non-financial disclosure regulation. And so we have, first of all, the major companies still not fully under the new regulations. They will have to adjust. They'll only start reporting this year on the eligibility, on the taxonomy. Probably next year, they'll start, some of them voluntarily reporting on the alignment. And so, as you can see, there's a gap between what financial market instruments need to report and what actually the companies are able to report. So as an example, if you're buying a stock, an equity share, you know that that company is still not fully disclosing their alignments, but the financial instrument has to do it. So there's clearly a gap here. And on top of that, the taxonomy itself is still not completed. We have delegated acts for the first two environmental objectives, but we still have 4 more. And these will be released during the course of next year. So obviously we have a lot of dots to be linked here, but let me just say that for agile, flexible entities like the fintech, this is a huge opportunity. There's an amount of data out there that will be clearly available, and there will be an incredible need for reporting by the traditional banking sector. And the companies, by the way.
Yeah, that's an interesting point. And just making my follow-up question already, I think the banking system still relies a lot on proxies and a lot of overall statistics of the carbon footprint. So do you think fintechs will also, or at least the startup ecosystem will also be key to help these, either both the banking and also like their investment solutions? Do you think they will help them also better learning on how to measure their impact and how to provide that kind of info?
Proxies, no. So the whole approach for the taxonomy is a science-based approach. So the whole idea is to move away from proxies, move away from estimates. And that's very clear. So the work to be done here is actually to help measure with the right criteria, to have the precise measure of what we need, whether it's in a carbon footprint, which is reasonably used nowadays by most companies, but when we go to the details of the taxonomy objectives and criteria pledged in the taxonomy, then there's a lot to be done there, and there's a lot of data to be mapped, and there's a lot of money to be earned.
Thank you. That's the main point here. Might be might. Dmitry, you were just to make 2 questions, one from Dmitry and one to Anna. You were talking about exploits and how Hacken helps all these exchanges dealing with exploits. But how do you kind of support the exchange dealing with also with scams, and how you are helping final users better dealing or being I think more protected from phishing and from other types of scams that cannot be really seen as exploits, but misuse of the apps?
The quick answer is education, but like it's not a silver bullet that can solve all the issues. I think it's important to underline that crypto is permissionless. What does it mean permissionless? Once you send the crypto transaction, then you cannot revert it. And it means like 2 things. So, for example, if hacker has stole your money, if he is not stupid, of course, and he didn't send the money to centralized crypto exchange, then this money is gone forever. It's not like in the banking industry that you can try to negotiate with the correspondent bank to revert the transaction. And the second thing is that once the transaction is being sent from your neo bank, it also cannot be reversed, and you will probably be subject to certain financial losses and probably some lawsuits. And there is a very big difference between, like in traditional Web 2 business, when if you got hacked, you just lost some I don't know, some data, some private information about your customers, which is bad, but you can survive with that. And in crypto, in Web3, you lose not only data, you lose money, you lose reputation, and probably you lose even business. So, yeah, if you consider to add custodial or non-custodial crypto wallets into your fintech solutions, like cybersecurity should be, of course, one of the key things you should think and consider and invest at most.
Yeah, thank you. And Anna, and to close and to try to keep it like within 2 minutes, I would say. It's already something. No. My question is, often Portugal is seen, and I think it's true, it's a tech-savvy user, but also with a low financial literacy. And how do you think platforms that allow them to better operate insurance and make better decisions in terms of how they deal with their insurance products are accepted by this user, or if this user also needs to be taught on its advantages, or he just wants to rely on his agent forever and deal with that like that?
That's a very good question, and the answer is probably both. But the way I understand financial literacy is a consumer making good decisions about their own money, right? It's not about being rich, it's about getting the money to good use, right? Understanding what the options to save are, the options to invest in, and so on. And Portugal is really lacking behind. In the United Kingdom, it's very common for people to go online and simply invest everywhere and expect the returns. They understand the risks and they understand the consequences of everything, right? It's not very common that we invest our money other than on bank deposit accounts and simple stuff like that. So there's a long way to go in Portugal. Insurance, it's also, there's lost a lot of illiteracy in insurance. I always like to say this because insurance is usually perceived in a negative way, like a burden. But actually, insurance is very important in the society. It does have a key role in the economy as well. And during COVID, there were a lot of examples of that. If I think about insurance, I'm thinking about an investment. I am paying currently a given price every month for a financial certainty for an unexpected event in the future, right? I'm ensuring that if something happens, I will be financially able to deal with it. I don't have to go to my savings. I can use my insurance product to do so. So I should see I should see insurance as also an investment decision. In a different sense, but it is, right? Sure. We know that insurance is perceived negatively. It's traditional, it's boring, it's very formal, it's bureaucratic. No one cares, really, because the process is just painful. I think the way to tackle that is definitely creating simple experiences. Forget the legal jargon. When you're buying insurance, you're actually entering into a contract. Forget that. Explain that in simple terms. Everyone will understand. We know they believe that everyone is capable of picking and buying insurance on their own. If things are explained in a simple language with a user-friendly experience, we provide everything that the consumer needs to make an informed decision. I'm capable to buy. I don't have to delegate on someone else to do it for me. I can do that if it's an option, not because I feel insecure on my decision, because I'm not provided with all the information necessary to make that decision. So I think the way to tackle that is education, creating tools that make information readily accessible to people. Talk simply, don't complicate. Explaining in simple terms, complicated stuff, it's the most hard thing to do. But if you're able to do that, that's how you convince people to actually embrace insurance.
Thank you, Anna, and thank you all. I think we should pass, and let me just thank you for these trends, and you can check them also on Portugal Fintech Report. Thank you very much.
Thank you so much. Obrigado.
Thank you so much, António, Carlos, Ana, and Dyma. So now we're going to move on to a case study of the first crypto unicorn in Portugal. We will have José Pedro Silva, engineering manager of Anchorage, with us online. Hi, José, can you hear us?
Hi, good morning. Yes.
Okay, so the stage is yours.
Thank you so much. So good morning, everyone. My name is José Silva from Anchorage, and today I'm going to share with you some of the things we are doing at Anchorage. First, what Anchorage is, and what we are doing, especially in Portugal. So I don't know if you can signal me if you are seeing my screen. I think you are, right?
We can see it, yeah.
Okay, so can I see your hands, or can you guys raise your hand if you heard about Anchorage before? Okay, good. So most of you already know about the company. Anchorage Digital is the first federally chartered bank. What does this mean? We are the first crypto fintech to own an OCC charter for our custodian services. And the story of Anchorage actually starts in 2017 when our co-founders, Diogo and Nathan, they were being approached by several different groups and enterprises, because if you recall, back in 2017 was the first big boom of Bitcoin, and people realized that they forgot their wallets, their passwords for their wallets. And so they actually were sitting on a few millions without access to it. And so they started to realize, Nathan and Diogo, that this was actually a problem, because not only one or two institutions and VC funds or family offices were coming to them, but a lot of them. And so the company started basically out of this real need. How do I securely store private keys and wallets in a way that I will not lose access to them, in the way that I will not lose access to our assets? And so Diogo and Nathan, that were working at Docker at the time, actually had a lot of knowledge around securing infrastructure and securing private keys, as well as experience in the financial sector, since both of them had worked at Square, actually was where they met. And so they could actually come together with both the financial sector experience and the security and enterprise security experience. And so we were founded in 2017, and we have been growing since then, working with a lot of companies in the sector to help them create and grow on their crypto strategy for the future. And so I heard a colleague from Visa speaking a couple of minutes ago, and we are working together not only with Visa, but with several companies towards the future of crypto, the crypto space, and the crypto ecosystem. So what does make Anchorage solution apart from others is our security and the way we deal with security. We specialize in asset custody with using HSMs, hardware security modules. And we craft a mechanism where we never expose unencrypted data outside the HSM. So private keys never leave the HSM unencrypted. And we use air-gapped HSMs to actually do the signing process of all the payloads that we send to the blockchain, so that our HSMs are never directly connected to the internet, which adds another layer of security. And so on top of this, we have a custom policy engine built into the firmware of the HSMs that is proprietary and built by us, that allows our HSMs to only sign the operations that are fully validated by quorum. And that quorum was met through end-to-end encryption with your mobile device. And so basically what we can do is with Anchorage security system, all our keys stay in the hardware. And we not only authenticate humans and devices, but we bring this together to using advanced biometrics and behavioral analysis in order to go through the quorum signing process that is ultimately what allows an operation to be approved. This means that not only we are securely authenticating the human behind the device, but also the quorum approval process enforces that this needs to be done by several users before an operation is actually signed. And so this allows, and the infrastructure allows not only for custody, but also for other forms of active participation in the blockchain world. And we are seeing a growth into different models of participation, including not only staking, but also governance and interaction with DAOs and a lot of different new aspects that are coming up almost every month at this point. And on top of all of this, we evolved from only a custodian company to be a fully fintech company providing financial services. So not only custody, but trading, financing, and settlement opportunities. And all of this can be done, and I don't know if you saw the news, but we launched recently our Built with Anchorage program, where you can integrate all of these features using APIs. So other companies that don't want to go through the hassle of dealing with private keys and interacting with all the different blockchains available can build their own products on top of Anchorage platform, where we abstract all of this complexity and we allow companies to build their products directly to consumers without the need to specifically understand each and every aspect of securing private keys and interacting with all of the different blockchains available in the ecosystem. One important aspect that I didn't refer in the beginning, Anchorage only deals with institutional customers, and so we don't provide any retail services. Regarding our expansion plans, we recently announced our office in Singapore, and so we have a strong plan to grow in Asia that we are putting in motion, apart from the US where we are based. And so the next big focus is on the Asia and the Pacific region, where we are doing extensive investments in order to grow there. And we are seeing also the growth of the crypto space in the crypto market in the Asia and Pacific regions. And so it's really one of the biggest areas of focus for the crypto industry over the next few years. In Portugal, specifically, the company Anchorage started in Portugal back in April 2020. Today, we are 74 only in Portugal. The company overall is around 400 employees. In Portugal, 74 with a big focus on engineering. So engineering, product, and design account for for the majority of the personnel that we have working in Portugal. And that was it on my side. I know that we are short on time. I don't know if you have any question.
Yeah, if anyone from the public has any question, you can make it right now. If not, I would just thank José for being here with us. We are very glad to have such like a unicorn with us, giving such inspiring insights. And yeah, thank you so much. I don't know if you can see us, but thank you so much, José. And we will move on to the next panel. So it was very important for us to have the first crypto Portuguese unicorn here with us, because the last chapter of the Portugal Fintech Report 2022 is actually about crypto. So I would like to welcome you, our last panel. So let's discuss crypto, CBDCs, MiCA regulation, and Portugal as a crypto lab. So I would like to welcome Mariana Albuquerque from Moraes Leitão, who will moderate the panel, Nuno Cortesão from Zarta, Ricardo Negrinho from KPMG, and Diogo Braz from Bison Digital Assets. The stage is yours.
Hello everyone, good morning. My name is Mariana Albuquerque. I'm a lawyer working with fintech and financial regulation here at Moraes Leitão. Moraes Leitão has been partnering with the Portugal's Fintech Report since the beginning, and it's now in its 6th edition, so that's amazing. And we are very committed to working with fintechs and enabling the ecosystem. I have with me Diogo Braz from Bison Digital Assets, Ricardo Negrinho from KPMG, and Nuno Cortesão from Zarta. I'll leave you a few introduction minutes to present yourselves, and then we can start with our panel.
So, thank you, Mariana, for the intro. I'm Nuno Cortesão. I'm the CEO and one of the co-founders of Zarta. Zarta is a platform where users can request loans using NFTs as collaterals. We are a fully native Web3 company that is building everything on top of non-custodial smart contracts.
Hello, good morning. First of all, it's a pleasure to be here, and thank you for the invitation. My name is Ricardo Negrinho. I'm a Director of Financial Services in KPMG Portugal. My background is mainly on traditional finance, so even if in the last year I'm also dedicated to innovation topics like cryptocurrencies and also digital worlds in the metaverse. But it's a pleasure to be here and to share a little bit of our experience and perspective, also coming from a different background.
Hello everyone, my name is Diogo Braz. First and foremost, thank you very much for inviting me, Portugal Fintech. I'm ecstatic to be here among this crowd, especially. And Bison Digital Assets is the place where I work at. I'm Chief Crypto Business Officer. And so I'm in charge of kind of connecting Bison Digital Assets with any external parties. In Bison Digital Assets, what we offer is exchange and custody of digital assets.
Okay, so with that introduction, let's start with the panel. And the first topic that we're going to discuss is CBDCs, which is a bit of a hot topic at the moment. CBDCs are basically in exploratory phase throughout most central banks. The main arguments to push for their implementation seem to be to have a government digital bank currency that can compete with crypto and ensure that central banks keep their role as in terms of keeping sovereignty over monetary policy. There's also an added goal of fighting financial exclusion and helping the unbanked. The design of the CBDCs is very much up to discussion. And it seems that here in the EU, at least, there's a consensus that any design that the CBDC will have will ensure that banks keep their intermediary role. So in terms of my first question to you, Ricardo, is in terms of CBDCs, what do you think are the main use cases for CBDCs, and how do you see them impacting the payment system?
Okay, thank you for your question. Regarding use cases, there are a lot of use cases. This, as you mentioned, is a very hot topic at the moment. It's being enforced by the Bank for International Settlements, that is a supranational entity that acts as banks of the central banks. And from a recent survey, 86% of global central banks are currently developing projects related with central bank digital currencies. 14 of them have already a pilot, so they are really testing, implementing in prototype mode the use cases. So, and in terms of use cases, I think we can split them between retail, and I think it was Gonçalo from Visa that highlighted the evolution in the payment systems since the use of since the moment when cash was king, I would say like that, and to the moment of as of today where contactless payments gained a lot of traction. So central bank digital currencies can be seen as another means of payment. It can be seen, central banks are putting it this way, as the cash and coins from the digital world. So, and in terms of use cases for the retail, what we will have here is an alternative payment method besides the ones that we already know today. Of course, there's a lot of design questions, as you mentioned, because there's a risk to disintermediate banks if people prefer to use central bank digital currencies. But in terms of, I would say, how this can impact also the existing payment systems, the fact is it can disrupt the current actors, meaning it can cut the middlemen that exist today that process, clear and settle the payment transactions. And we have also leveraging from the BIS work, BIS Bank for International Settlements. There was a very recent publication from BIS disclosing the conclusions of the most recent pilot conducted by the Hong Kong Monetary Authority about the implementation in Hong Kong of a retail central bank digital currency. Beside that, we have the example of China that is also disclosed in the FinTech report of this year about the usage of yuan. We have another use case for wholesale payments. So here, not basically interactions between central banks or central banks and corporates, where I would say the use case maybe it's not so visible for the common user, for the common citizen, but there's also here a possibility to optimize a lot the current payment process or funds transfer process between central banks. And once again, regarding this use case, we have also, it was published in October, another report from the Bank for International Settlements with a pilot implemented by 20 banks from 4 geographies, China, Thailand, United Arab Emirates, and I don't remember the fourth, but where they showed how to implement an interbank central bank digital system, diminishing costs of transaction, and showing how a platform, how the technology can be really put in place instead of being just a concept. A last word for the digital euro. As in Europe, we are also studying the launch of a central bank digital currency. And we are in the investigation phase. It was also recently disclosed in October, just for us all to be aware that this is really, I would say, an accelerating topic. but it was disclosed in October that the European Central Bank selected the partners to develop the back-end infrastructure to support at the prototype level still, but to support the development of a digital euro. And the partners include companies like Amazon, like CaixaBank, that is an established player in the banking system, and 3 other European companies that I don't remember the name. So,
thank you very much. And Diogo, coming from a group that has both a bank and a crypto exchange, I would be very interested to know your perspective in terms of how do you think that financial institutions should prepare for CBDCs, and what do you think should be the main design-driven factors?
All right, so I'll divide this question into separate parts. And the first is how institutions should prepare. I think that centralized digital currencies, they are from a central bank. So they are digital. So you can outline a lot of similarities to crypto. And if you can outline similarities to crypto, then you can also take a lot of conclusions that you draw from all this history that is not long, but is quite fast. So back in 2017, you saw a lot of disruption happening. So that's one of the similarities. It's disruption, and it's in finance. So if you have this sort of similarities, then what you can draw from here is that education is quite important, and it's actually paramount, because when you are actually implementing CBDCs, what will happen is both institutions and the individuals will have a lot of trouble just adapting to start with. Later on, then, it's quite useful for everyone, as you now have the same currency, the same way of operating with all the entities that are on that system. And then finally, the other part is quite more technical. It's not so much social as it is education. And the couple of big important factors that I see, one is scalability, where you need to make sure all the throughput that you need for a big economical region is there. And the second one is interoperability. So how are you going to do with many central banks working at the same place, which is actually the world, operating together? So how do you make sure that these CBDCs do not overlap on frontiers? That's one of the biggest issues I see in the future that should be worked on.
Thank you. And final question to you, Nuno, is do you agree with this notion that cryptocurrencies can compete with government-backed currency? So does this make sense?
Of course it makes sense. Crypto was designed to disrupt the payment industry, the traditional currencies, by definition. So stablecoins have the space because they basically provide things that central banks can't. We have the capability to decentralize the currency between multiple players, and that creates also capabilities on top, anonymity of the users. So there are needs that need to be fulfilled, and that are people seeking for it, that cryptocurrencies can bring. The traditional cryptocurrencies have a deflationary space, so they work as an edge against inflation, and this year is providing a view what is living on an inflationary space. And so we have those cryptocurrencies working as a way to provide users capabilities to fight the macroeconomical status that we are living. Then we have stablecoins, in the other hand, that have the possibility to provide payment gateways for users and to make people to not only betting on the investment side, but also providing the capabilities for users to use systems and to trade between themselves. And it's very interesting to see how CBDCs are going to solve this, because central banks are trying to push the CBDC agenda because it makes sense. They need to disrupt themselves, but they can't afford to fail. And we are on a field where innovation is key, and startups have the space to do different stuff faster, and it's a trade-off between risk and execution. So cryptocurrencies and stablecoins have a place to be here. Of course, we can neglect, when start talking about cryptocurrencies and stablecoins, we can neglect, for example, the Luna example. That was a place where we see that the ecosystem is still very nascent. So just to give an idea, the stablecoin market cap as per today is more or less $150 billion, which is very, very, very small. And the financial ecosystem, it's like $1 quadrillion. So it's a very, there's a very big difference between magnitude orders here. And that leads to the possibility for abuses of power on top of the crypto space, because the ecosystem is very small. It's easy to perform heavy attacks on the ecosystem itself. So these are the kind of risks that arise in the space. But as the market starts to be more complete, more mature, stablecoins will stay and will compete directly with CBDCs. Traditional cryptocurrencies will also empower other types of use cases, and it's going to be very, very interesting to see how this is going to unfold.
Okay, interesting. We have a bit of a short of time, so I think we need to move to Mika, although there would be a lot of things to discuss around this issue. Mika, the European Council has recently approved a final draft. So the regulation is now going to go to the European Parliament for final approval. And this is going to be a major game changer for the economy. So my first question for you, Diogo, what do you think will be the impact of MiCA in the crypto economy?
It will actually be enormous, but on the start, it will come with its hurdles that are just the pains from very small companies starting to right now have any sort of service within crypto. We at Bison Digital Assets identify this issue a lot. However, we're happy to be able to rely on a very talented team on compliance and legal on the side of the bank. And so we're always preemptively looking at whatever is coming when it comes to regulation. And this is not something that we choose. It's really the practices from any bank. So if we are working with this very regulated entity, we are drawing everything that we can into our own services, because that's what we want to bring from the bank into crypto. So for the main question on how this could be in the future, on how this could be very positive in my view for the future, is that you finally have the same rules, the same unified way of working, and a very clear regulation across a whole economic region. And that's only positive for all the business and business growth actually within the ecosystem.
Yes, it will create passporting, which is something that doesn't exist now. Okay, thank you. Ricardo, I would like to ask you also, do you think that MiCA goes far enough in terms of regulating the market, or are there shortcomings yet? And if crypto is going to be a new financial asset class?
I think it's just a first step, and we have lots of examples in the traditional finance domain, like Basel agreements, MiFID. I think MiCA is a game changer, as you said. It will allow the industry or the key players in the industry to differentiate themselves. We saw the last panel, the last keynote speaker from Anchorage. He presented Anchorage as a federal chartered authorized entity like any other bank. So this is, in my opinion, especially in the phase that we are in the industry, a key differentiation, a key differentiating factor. If I'm an authorized exchange, if I'm an authorized crypto service provider, I have, I would say, a mark that increases the trust that people and institutions will have on my business model, on my company. If it goes far enough, well, it's already a lot of requirements, especially for, I would say, smaller companies and companies that were used to dedicate themselves to strategy, product development, and now they have to also increase the time and attention and investment money dedicated to risk management compliance, and we know banks suffer the same and a lot more. And basically, I would say extensions from MiCA. Of course, we will learn a lot from this period. There's still a lot of regulation is not published, guidelines, RTSs that will complement the regulation. And of course, there's classes of digital assets like non-fungible tokens that are not covered or not very well covered. So this will have to evolve. It's just the first step. Just last sentence, when I started my career more than 15 years ago, Basel Agreement that defines the rules for banks calculate on fund requirements for the risks that they incur was published. We are more than 15 years later, and this agreement is still being revised, updated. We passed through a global financial crisis, a pandemic, and the rules are still not perfect. So we're just starting.
That's true. And Nuno, taking on what Ricardo just said, owning a company that has crypto, has NFTs as part of its business model, how do you feel that MiCA can affect your business?
So regulation is key for ensuring that business can thrive. So we saw a few months ago lots of crypto companies that got their bank accounts slashed because there is no regulation in the space. So MiCA, it gives us the first stone to ensure that we start to look into this space, not as a degen move or a place where people that are super enthusiasts of innovation are there, but a place where business can drive and can coexist with incumbents and live for 10, 20 years and create some innovation. What I see, and this I'm very afraid of talking about legal on a legal office. I have, and it's not my expertise for sure, but I know that's going to be published now. There is a period for execution. So, and what I've seen when I was on the traditional finance service providing is that on the open banking, there was a period to apply the open banking standards, and all the banks done it in the last mile, on the last month. So I believe that MiCA will have the same kind of effect. Everyone will try to push with the belly because it's because it's hard, because it's not clear what they have to do. And so when we arise to the fundamentals of now, it has to be implemented, all the companies will try to jump at the time. So it's going to give a very big opportunity for companies to specialize and to help big players and small players to use this as a tool to operate and to help to mitigate problems for users in the future.
Okay, thank you. And final topic from our panel today is Portugal as a crypto lab, and we've seen in the report right in the beginning there was a 66%, I think, funding that's going to crypto. So it's a significant size of the pie. And my question is, a lot has been said in Portugal, has been featured as being sort of a crypto hub and attracting a lot of digital nomads and crypto enthusiasts. A lot of it happened also because Portugal was perceived as having a tax friendly approach to crypto. So now my question, and I think I can start with you, Nuno, is do you think that Portugal has become a crypto lab? Do you see evidence of that in terms of the businesses that you encounter?
So my take on this is more on the community side. No institution view on all of this, but from empirical evidence, I'm present in the majority of crypto communities inside of our country, and every day 5-10 people join the groups, fully reallocating. I've been on a few cryptocurrency conferences in the last month, and Portugal is kind of the new jewel. It's like people are realizing that we are crypto friendly, that we are a safe country inside of European standards. So they are moving here because it makes sense for them to be here. What I've noticed is that the crypto communities that are arriving are kind of bubbling themselves. So they are living alone. They are not touching so much the startup ecosystems or the traditional banking or fintech ecosystems. They tend to be a little bit alone, and they typically join together to talk with themselves on their own meetups, their own events. So I think we need an effort to try to normalize and to make the people that are reallocating, that bring lots of added value because they know all the perks of the crypto ecosystem, to integrate more with the more traditional ecosystem. And we have to be, when one closing line is that we have to be very careful on government side on narrative. So a few messages appeared about crypto taxation. They are very unclear. The majority of people abroad, the first question that they would ask is, are you guys going to tax crypto? What's happening? I'm moving there. What's going to happen? Because I'm moving based on a set of premises that are changing. And so I believe that we take this with the easiness. It's this kind of news has to be placed and executed when there is a clear regulation on what's going to happen, so
everyone knows exactly what they can expect.
Yeah, exactly.
I understand that, and I think we don't have a lot of time remaining. I do have two final questions, one for Ricardo, and this is actually a big question for me, because Nuno just said previously that few months ago, there was a number of crypto companies that got their accounts closed with banks. And understanding how financial institutions, our legacy players, are adapting to crypto, and if they're doing anything to get adapted to crypto, and or not, or how in terms of your consulting, do you see it happening?
Well, that's a very good question. And I will split it in three parts. And I will start by the first one that is still outside Portugal. At KPMG level, this is a topic we are exploring a lot. And we have a global community of interest. And we see in the UK, in France, we see projects happening in the design of roadmaps, understanding what can financial companies do to adapt to this new, I would say, market, to this new asset class. And we have an example of, for example, Société Générale, one of the biggest banks of the world, created its subsidiary Forge to manage to offer services related with digital assets. But not only in France, in the US, we also JP Morgan, BNA Mellon. So we see a lot of banks already adopting, changing their business models and creating subsidiaries or dedicated business units to manage and offer service related with these digital assets. Now, coming back to the Portugal reality, we see two groups of players. I would say fintech, and I will the current regulatory context or framework. Bank of Portugal already licensed entities to provide crypto services, even with a very, I would say, light context compared with MiCA. And we have Bison, I would say, from the traditional finance world that adapted its business model and created its own marketing plan and offering of services related with the cryptocurrencies landscape, and we have the other traditional banks that we are seeing some actions, some interest. They are raising some questions, but we don't see still. They are still not on the, I would say, the level of that Bison is with go-to-market strategy, products offered. Here we are open and we provide services. But they did some things. They created dedicated areas, run internal projects, but still on, I would say, at a very early stage. And last point of the question is, we also see fintechs getting approved to provide these services. And we have currently 7 entities approved. One of them is Bison, the other 6 are, we have Utrust that also spoke here today. So I think we are in an early stage, and just to conclude, John in the first panel said one thing that I thought it was very interesting, that was that, well, fintechs are not an alternative to banks. They will not replace banks. Maybe they can partner. And for banks that are not still addressing this topic, I think this will be maybe a way to start thinking about it, how understand what is the ecosystem, what is the landscape, what services are offered, with who we can partner to accelerate the process. I think MiCA will also help it because it will give the additional regulatory context, and we know that banks are heavily scrutinized by the supervisors. They don't touch asset classes that are not, I would say, in secure terms in terms of regulatory framework.
Thank you, thank you. And on that note, Diogo, and to wrap it up, what do you think will be, how will crypto shape the economy? So that also plays into Bison's goal. So what's your vision?
Okay, to start with, let me be very clear in the aspect that Bison Bank is not a crypto bank. So for that, we have Bison Digital Assets. And actually, the narrative that the bank wants to push is not the crypto narrative. The idea is just to offer one place where you can acquire crypto if you decide to diversify, but in a way that the practices are all battle tested and are all drawn from the side of the bank. So. Just to make it very clear, but then on how the economy will be shaped, I think we see it happening all around. In one way, in some ways more than some others. But even here in Portugal specifically, we already see permutations where crypto is used to acquire real estate. So that's just one use case, but we also see a lot of debit cards that are connected to then crypto wallets that are able to spend automatically whenever the user wants to liquidate. So I do think that there are use cases and that in the future crypto could be just could be used by whomever decides to have exposed to it, just like any other sort of currency.
Okay, thank you. Thank you very much.
Thank you. Thank you all.
Okay, thank you. Thank you so much. I'm sure we had a lot to discuss about all of the topics that were covered in all of the panels. So thank you to all the speakers and moderators for their amazing insights. Now, to end this session, as launching the Portugal Fintech Report 2022 wasn't sufficient for us today, we have another announcement, a big announcement, so I will call Marta Palmeiro, board member of Portugal Fintech, to announce the Fintech House Scholarship 2023.
Thank you so much. And I will be very brief, but this is indeed a very big announcement. When Portugal Fintech started back in 2016, this started with a very small report that featured, I think, less than 10 startups. We've come far. You look at the report that you have today, and it shows the maturity of the whole ecosystem. Still, we want to be very committed to continue supporting the startups from the very, very early stages. And we understand that anything we can support at the pre-seed level really has a massive impact to the speed of development, and particularly these companies have very, very little money. So we've created the FinTech House Scholarship, where we'll be giving 5 scholarships. Wait, sorry, what's... No, so can someone help me? Yeah. Yeah, okay. Well, so we'll be giving 5 scholarships, 2 physically in the house and 3 virtual memberships that correspond to 10,000 euros in value. This applies for early stage startups, and one of the biggest, again? No? I'm not clicking? And I would say that one of the biggest value is the access to this mentorship network that represents founders and C-levels of some of the fastest growing fintechs in our ecosystem. So Locker, Mudey, Coverflex, Lovis, Zarta, CoinScrap, Utrust, etc. So these are really the best examples and founders who have been building this business from the ground from the past, I would say, wait, definitely I'm clicking on the wrong place. But so who is this for? This is for early stage startups who have raised less than 50,000 euros in funding and have less than 50,000 euros in annual recurrent revenue within the, let's try it, no? Yes, no? Within the InsurTech, RegTech, FinTech, and the crypto space. So the process is we will open applications now. You can go to the FinTech House and the website or go through this QR code. We'll be receiving applications through November, reviewing them through December, and the program will be between January and June next year. And thank you very much. Welcome. And looking forward to, please send us the startups, and looking forward to keep growing the ecosystem. Thank you.
Thank you so much, Marta. So last but not least, actually probably the thing that everyone is waiting for, especially who is watching us online. The report is out. You can download it now. I would like to thank everyone that was involved in the report, the startups that applied, everyone that wrote the articles, everyone that was interviewed, and of course our amazing partners, Visa, KPMG, and Moraes Leitão. Thank you so much, and thank you to everyone who is watching us.